Today we're talking about China and how they dug themselves into a ditch with this housing crisis they created. Back before COVID, they started selling houses on a pre-sale basis. Banks in China would pre-sell houses. That means the house wasn't built, but they would sell it. So you're getting a plot of land for your house. You're buying a house, but you're not getting it. You're just getting a plot of land. It's insane. I don't know how they thought that was sensible or how that would even work. But imagine you buying an iPhone and then you just get the box and they say, hey, we'll build the iPhone later. Just keep paying monthly for it. That's insane to me to even think. I can dumb it down even simpler. Imagine buying a car and then you're still taking the bus. Just picture that. Just close your eyes. Picture you're in the dealership and you see that nice Tesla or that nice Nissan, the Honda, the Lexus, and you go in and they tell you pay the monthly payments for however many years, usually 3 years, 5-year terms, and we'll give you the car when we build it. And they don't even promise that they're gonna build it. There's no guarantee. They didn't sign on any paper saying they'll guarantee to build that car. You just trust them. Basically, that's what happened in China. These Chinese citizens, the average Chinese person was told by their major banking systems that we will qualify you for a pre-sale mortgage and you could own real estate. That's the Chinese dream. In China, that's what most of the people do. In China, 70% of the household income is invested into housing. Now imagine 70% of their income being invested into housing that wasn't built. It's sad what happened. But that's not the only reason we ended up in this crisis. China ended up in this crisis, which is a Chinese problem, but will end up being a global problem soon because of certain factors. They sold and managed their loans horribly. The banks sold loans to unqualified buyers, and they paid contractors way ahead of their schedule. And then COVID happened, so their schedule even went further back. In the U.S., we were in lockdown. We couldn't leave. Not many people were going to work. We're down to 20% capacity, only essential workers. In China, it was much worse. It was almost 95% lockdown. No one out but law enforcement and certain medical professionals. The crisis got 10 times worse within months of 2020. Contractors were not on site, not building houses, and it just caused for this cascade effect that we're about to feel really hard.
3 a.m. I've got my mask on in the midst of a rush that essentially they are putting Wuhan, the city limits, under.
This is back in 2020. This is when COVID started. This is the main reason we're getting to this point. So I just want to emphasize how heavy the lockdown was by showing this video. Again, go to the CDC for COVID information. YouTube is not your source.
A lockdown.
Wuhan in China now on lockdown as the country struggles with fear of a pandemic.
Desperate measures to try and contain the deadly coronavirus.
More than 11 million people who live in that city now kept from leaving.
China was the first to go on lockdown back in January 2020. No one was allowed to leave the city. No one was allowed to go to work. I can show the rest of the video, but you can just picture it. Just thousands and thousands and thousands of citizens in Wuhan initially being locked down. That's Wuhan. That's one of the smaller cities. But then it moved to metro areas. And then Shanghai and all these other cities were getting locked down and business was not being conducted. That was bad for the local economy and it was bad for the real estate. That meant contractors couldn't build these houses that weren't built yet. Imagine buying a house for an insane amount of money, 70% of your income. That's the average Chinese citizen spending on real estate. That's 70%. 70% is a big number, depending on how much you made. But even if you made the average, which would be in America, an average wage is about $45,000 to $55,000. Imagine losing 70% of that into something that's not even built yet. And that's not 70% for 1 year. That's 70% for a 30-year mortgage. So 70% for 30 years. Gone. And now we move on to the second cascade effect. From the COVID epidemic in 2020 and the lockdowns following, because they had multiple lockdowns. It wasn't just one lockdown. There was a lockdown in 2020. There was multiple lockdowns in 2020. Multiple lockdowns in 2021. And now they're even doing lockdowns in 2022. China is pro-lockdown.
COVID policy has clearly stifled its economic growth, but now it's facing a new crisis,
People are refusing to pay their home loans. In particular, people who took out loans for apartments built off the plan are refusing to pay. The reason is that most of these apartments aren't finished and there are no plans to finish them. Bloomberg reports the value of the boycott so far has reached an astounding 2 trillion yuan, or 430 billion Australian dollars. It shifted the focus from the embattled property developers, including Evergrande Group, to the
480 billion Australian dollars. That's how much is being boycotted right now. Let's convert that. That's $294 billion. $294 billion actively being boycotted at this time. And this news video was put out a month and 15 days ago. So right now that number should have increased because it's actively growing. This boycott is going to lead to mass defaults on these banks. These banks are paying the mortgage. They're not just letting it go. And once they get into a certain number of defaults, what happens to the bank?
It shifted the focus from the embattled property developers, including Evergrande Group, to the banks now. Mortgage holders have taken out their anger online and vented their frustration in public. But the Chinese answer to all this is to send in teams of censors to erase all social media of any mention of loan suspensions, simply to stop the run, to stop the behaviour. Loan suspensions are the latest in a string of Chinese citizens taking action against banking institutions. Just a week ago, hundreds of depositors gathered in front of a People's Bank of China branch in the provincial capital of Henan. They were demanding access to their life savings, which were frozen in rural banks. Authorities responded with plainclothes security, violently breaking up the protests and dragging people downstairs.
So, in fair, China responded with plainclothes security breaking up protesters and mass silencing online media. So that's their way of combating this protest, which isn't going well because the number is growing. It's going to be 430 billion Australian dollars or 297 billion US dollars right now, and it's going to grow to the next amount. And once it gets to that number, a magic number that I don't know because I'm not a financial analyst, but once it gets to a certain magical number, everything goes to shit.
The value of the boycott so far has reached an astounding 2 trillion yuan.
2 trillion yuan. That's the number we have to remember. Since then, they did implement a bailout fund. All right, in May, China unveiled a 33-point plan. The 33-point plan included 120 billion credit line for infrastructure and projects, including money set aside to support the property sector. China announced 44 billion more in stimulus last week, but experts do not believe the measures will be enough to revive the Chinese economy or its battered property market. Yeah, I don't think a bailout's gonna work. It's too much money, and there's too many Chinese citizens that aren't willing to pay. They don't want to pay the tab for these banks.
Threatening the Chinese macro outlook, right? It's also these brimming risks from the ongoing property crisis.
Yeah, that's right, Heidi. It continues to worsen. The boycott spread over 90 cities now, over 300 projects. In Henan province, they're talking about a new bailout fund to help the real estate developers. Now, this is interesting because it would be the first state-backed bailout fund, and the idea would appear to be to channel money to those developers to keep them ticking over. We don't have too much more detail on it or how it will operate, but it certainly does speak to the idea that they're trying to kind of close the loop and keep the stress away from the banking system.
This is a Chinese government's plan. They're going to bail out developers and banks, and they're going to hire thugs, plainclothes security guards to beat protesters, physically beat their Chinese citizens, and then give money, free money to the banks. This is how the world works. If you're not the big guy, you don't win. Now we come to a climax in the banking system. So certain banks are going into billions of dollars of debt, not paying these loans.
Bank by assets in China. Yes, it posted a small gain in net income, but it faces 1.23 billion yuan. It's 178 million US dollars in overdue loans from those mortgage boycotts on unfinished projects. That's nearly double its previous estimate. NPL ratio for the real estate sector alone is nearly 4%, 3.97%. The overall NPL ratio is 1.41%. So that it's about double or more than double in the real estate sector. So you can really see that a company like AgBank, which has a lot of mortgage loans on its books, is exposed extremely to the property sector woes.
So a company like AgBank or Pinduoduo Inc. is highly invested in mortgages for the Chinese system. So they have a bunch of mortgages that aren't being paid because of boycotts. Because who's going to pay a mortgage when they don't have property? No sensible person will do that. But these Chinese citizens got stuck in that, and now they're protesting. And then they're getting their asses beat for protesting. And then on top of that, just throw salt in the wound, banks are getting free money from the government. But small banks like this, or is this even a bank? I don't know what Chinese banks are. I don't follow the Chinese government like that. I think this is a bank. It might be a small bank. Small banks like this are going to go underwater at first, and then it's going to cascade into larger banks unless they bail out everyone, which I don't put it past China. They might give out free money, and free money is free money. It's going to kill the economy, but it will save these banks.
New COVID outbreaks in China have forced 65 million people back into lockdown. Authorities are reinforcing Beijing's zero-COVID policy, and this requires partial or full lockdowns and quarantines. But the move has sparked major fallout, with many people claiming that these lockdowns sometimes prevent citizens and foreign residents from getting basic needs met. Let's bring in foreign correspondent Lucy Kraft.
This video is dated September 6th. Today is September 9th. So that means lockdowns are actively in effect in Beijing. That's another cascade in effect that's going to lead to a lot of development being delayed, even if developers weren't able to deliver on certain properties. Now they aren't able to deliver on anything because there's a lockdown in effect. That means workers are going to either get sick, have to quarantine, projects are going to get delayed. Chinese investors will not get their houses that they wanted to buy. And then it's going to lead to more boycotts. It's going to lead to more defaults on loans, and banks are going to have to go underwater. Unless the Chinese government just figures out how to give out trillions of dollars, which I don't put it past them. They already gave out a couple billion. What was it? 44 billion? 44 billion in May. I don't put it past them to increase this number tenfold. It would blow up their economy, but their economy is fucked anyways. They gave out 120 billion in infrastructure projects. And now it's 44 billion more in stimulus. So in total they gave out 164 billion. Wow. 120 is a credit line, so it's going to get paid back, but 44 billion in free money. If they increase that free money more, I don't know how or what's going to happen to the global economy. We're probably going to be fucked, guys. All right, that's all the news I have for you today. I will keep you updated. That means next week or the week after. If something develops in this story, I will be making a new video. So stay tuned. Please subscribe, leave a comment, send me a message, and we'll stay connected. If you're interested in this topic specifically, I will be keeping a close eye on it. I am interested in that global housing market and the U.S. housing market. So if anything goes wrong, I'll be the first to post a video. So subscribe. See you guys later in the next one. Peace.